All right, Alpha fam, let's do a quick market update. Before we begin, I do want to say that nothing in this video is financial advice. Everything is for educational purposes only. This is just my own analysis on the market. Also, if you're new to this channel, if you can please like, comment, and subscribe, we really do appreciate all of the support. All right, guys, let's get into this market. So we're getting a nice move. All right. Why are we getting this move? Because what crypto does and what all markets do is called the price events in well before they happen. So it's called buy the rumor, sell the news. We get the same thing. So I'll give you an example. If we get rate cuts, all right, the market prices this event in well in advance of the rate cut. So the day that rate cut actually happens, we dump. It's called buy the rumor, sell the news. The same thing happens for macro FUD events. Last week we said it. Japan, once they did their interest rate decision, once we move past that event, then we would start moving up, which is what we're seeing right now. We can see that this was actually the Bank of Japan's event right here. And now we're moving up pretty aggressively. All right. So what do I think is going to happen here? I don't think we're out of the woodworks yet, but I do think that this pump is going to be a lot more sustained than these other ones that were dumped and sold off immediately because of these events that were happening. The last couple of months, we've had multiple macro FUD events, starting with China and the Trump tweet with the tariffs that caused that liquidation event on 10/10. After that event happened, we moved past it, but then the government shutdown occurred. During the government shutdown, we had rate cuts, but then the rate cuts happened. Jerome Powell said, don't expect more interest rate cuts. The market didn't like that, reacted really negatively. We had all of these different events, including the Bank of Japan, and we are now past it. All right. So now the market is looking for a North Star. It needs a guiding light, and it has it. 2026 is going to be that guiding light for it because it's looking at this. We have just started quantitative easing. All right, you can physically see it. This thing is physically going up now. We just started on the 10th of this month. They made the announcement on the 10th. They started on the 12th. They've already pumped $17.56 billion into the economy, and they're going to continue to do it. All right. As they do this, you're going to see this liquidity come into crypto. Then we're going to get stimulus checks. All right. Every American during taxes, when they file taxes, are going to get anywhere between $1,000 to $2,000. After they file, this money is going to find its way into the economy. Trump went on the news the other day and did an interview. You know what he said? They said, is the person coming into office to take over for the Fed have the notion or the understanding that they're doing this to lower interest rates? And Trump said, yes. Of course he is. So we also have the market pricing that in as well. All of these combined, even Raul Paul said, when we went off the back of the largest interest rate hike in human history, it took the Fed a lot longer to stop quantitative tightening than they were originally planned. But then we also have to understand Trump was also partly to blame with this. Trump comes into the office and starts tariff wars, trade wars. So then it made the Fed literally stop in their tracks for what they were already starting to do, having to wait to see the effects on the economy and the different metrics. And if inflation was going to rise, if unemployment was going to rise, the different things that were going to be the fallback from it. Now that they've kind of moved past this, all right, and all the FUD from the tariffs is past us, like it's behind us. Now the market is anticipating for 2026 to be a really good year. And Raul Paul really breaks this down and he explains, basically, the 4-year cycle used to be the 4-year cycle until COVID, when they had to extend and then roll over the debt. The whole thing is this, guys. America has to roll over their debt. They typically do it every 4 to 6 years. And then what they do is they lower interest rates and then they pump a bunch of money into the economy and then they refinance all of that debt. So when they do this, crypto is a liquidity sponge. It's the most illiquid market in the world. It is going to absorb all of that liquidity, and we're going to see a massive move in the market from this, guys. All right. Now, am I going to say this is going to start today? Am I saying that this is going to be something that might not take a few more months to play out? Am I saying that we couldn't chop around in this region for a little bit more? Of course we can. All right. But I'm also looking at it like this. This is the Wyckoff. So when we're in the Wyckoff, we're looking at these accumulation phases. All right. And we're always looking for a couple of key indicators that we're in the accumulation range and ready to break out. One of them is when we do the spring and the retest. To me, Bitcoin did its spring and retest right here. So if I back this up a little bit, you can see this was its trading range, resistance. This is resistance level. And then this is where it's finding its support. It deviated out of that trading range, did a retest, and then moved up, did another retest, and now we should be getting ready to break out of this. And I'm not saying that we might not, move up to here, reject one more time, come back down, and then do it. That's totally a possibility as well. But I do think we're in a general accumulation range. I'll show you another example of what this looks like on a coin that I did a trade on last time when it showed me the same characteristics. It was Athena. Athena is doing the same thing. This is its trading range. It has now deviated out of it, and is now we're waiting for it to come back in to its trading range. All right. Last time Athena did this was over here. You can see its trading range. It deviated out, got back in, did a retest, and then the rest was history. It proceeded to do about a 3x. All right. This is something that you have to look for, and it's really a way to kind of trick people into making them think that, oh, we're breaking market structure, but all it is then to sweep liquidity and for whales to be able to accumulate at the lowest possible price they can. As soon as these levels are hit, the market immediately reverses, because this is a massive entry zone for most people if they know what's actually going on from a technical perspective. All right. What you have to do, guys, and I say this all the time, you can't approach this market from one way. You can't approach it from technical analysis only. You can't approach it from macro only. You can't approach it from fundamentals only. You have to apply pieces of all of these things to give you a clear picture, because if your macro doesn't line up, it doesn't matter what the technical analysis says, it's going to go right out the window. You can have the best project in the world with the best fundamentals, but if the macro is not lining up and the technical analysis looks horrible, it doesn't matter. You have to be able to apply these things to give yourself a real edge on the market. And that's what we do over here at Alpha Syndicate, is we apply these principles to give us a real edge into the market. Now let's look at TradFi markets, guys. So last night, both opened up really, really good. And I'm a big believer that typically TradFi markets are going to give us a good indication on the direction of the traditional markets as far as futures opening up on Sundays. So if futures opens up strong, usually it's a good indication that Monday opening for the stock market should be pretty decent as well. Now, I've seen this also not happen. Sometimes I've seen the Asian and the UK markets pump the markets, and for some reason the US market decides, nope, Monday morning dump. All right. But it usually, probability wise, more times than not, we usually have a good day when futures open up strong, which is what we can see on NASDAQ and on futures for S&P 500. I think the S&P 500 and futures are going to make new all-time highs probably pretty soon. All right. With that also being said, Ethereum versus Bitcoin looks pretty good too. We can see it is sitting right above the 50 on the 4-hour, and it is rebattling this zone right now as we speak. All right. And I do truly think that this thing will get back above it. This was just doing a retest of its descending wedge pattern that it broke out of, and it just wanted to do an additional retest before actually moving up. This looks pretty good. Bitcoin dominance is a little bit higher than I would like it to be right now, but I think it's getting ready to reject there and break back down. But to me, on the weekly, just another bearish retest. We're still well below the 50. Looks pretty good. With that being said, guys, we're waiting for TradFi markets to open up, but I do think things look way better than they did just a week ago. All right. I think we've moved past the events that were really holding the market down. And I think it's now time for the market to reappreciate and start moving back up. All right. With that being said, also for anybody, kind of goes back to the being able to apply macro fundamentals and technical analysis. If this is something that you're trying to learn, if you're tired of being in this market and feeling lost, if you feel like you don't understand what's going on, if you feel like you're just trying to gain an edge, if you're trying to network with people, if you're trying to be in a real community with people that are actually working together to really outperform this market and to become as successful as humanly possible, click the link below, guys. We'll see you inside.